Hey traders, Bearable Trading here. Just going to do this very quick video as we've had some movement on cryptocurrencies which has led to resolution of these trades which I highlighted about a week, 10 days ago. Firstly, apologies for the sound, still waiting for my new headset to get delivered. Secondly, as always, this is not financial advice, it's purely for education and entertainment. Any actions you take based on anything you see or hear on this presentation is done purely at your own risk. So just to recap, we had some trades highlighted for short positions, initially on Bitcoin, which was stopped out, and as we can see from the charts here, we did nothing on Ripple. Binance Coin and Solana, if you'll recall, I said although there was a short position, this was the trigger bar on this purple line here. This was the entry bar, the stop at the high of the previous bar. Same setup, for Solana. I wasn't actually taking those trades, and I didn't take those trades. Initially, the sort of reward and for the Binance trade was about 1.75. The Solana was about 1.25 from memory. That in itself is not a reason not to take the trade, as I've mentioned before. Whatever your risk reward is a metric that is calculated on the completion of the trade, and is purely a measurement of how efficient or how good, for want of a better word, your edge is, and how efficient you are in executing the edge. But we can see here that today the Binance coin and the Solana coin would have both hit their this was the entry, they wouldn't have been stopped out and they would have hit their targets today. The final reward for the Binance would be 1.62 units per 1 unit of risk, and the Solana 1.09. And the reason for that changes, as I've mentioned, is when we look at Ethereum, the target is dynamic. It changes every day based on previous market action. It's not just a set. Well, I mean, you can use it as a set and forget from the initial target, or what I do, I actually use dynamic targets. The market is changing tick by tick, so that's the reason I use dynamic targets. And so if we now look at the other three markets, the Bitcoin, Ethereum and Litecoin. So the Bitcoin trade was stopped out, so that's 1 unit. Now whatever I'm not going to get into position sizing video here, but your unit might be a specific dollar amount. In this, I've put up here an example, $5,000. It could be $1,000, $10,000, whatever your unit size is. It could be a fixed percentage. It is another alternative. But if we just take it as 1 unit, okay, so the Bitcoin trade was stopped out for 1 unit. The Litecoin trade, we can see here, came and hit the target today. That resulted in a 4.55 unit profit. So if your unit size was $1,000 of risk, that would be $4,500 of profit. So if we lost $1,000 of risk here, we'd have made $4,500 here. And if we just look at Ethereum, this one I actually went into a bit more depth and shown you how the targets change on a day-by-day basis. And you can see here again that hit the target today. And initially, the target was here. It came close. If you'd stayed in, you'd have had, you'd have risk. As I mentioned previously, this is now your open risk from here, and this is what you're trying to garner. Get an extra amount down to your initial target. It's up to you how you manage that trade. You may well be just set and forget, this is the stop, this is the target, it's going to wait until one hits. In that case, whether you just left this initial target, or you change the target on a dynamic basis, which is what I do. It actually is only very slightly better than the initial target in the end. But it's important to realise, if you are managing, I don't move stops to break it. This was the entry of the trade here, open of this bar. I don't move the stop to break even just for the sake of moving a stop to break even. And you can see on this, what would have happened if you'd done that on Solana. This is the entry bar. Let's say you'd had a decent move. You think, okay, next day, I'm just going to leave it. It hasn't continued. I'm going to move the stop to break even. This is your break even point. It actually got nicked on that day. You get taken out at break even, and then the market then moves in your favour. So that's just something you have to be aware of, in your trade management. There's no point, looking back over your trade and saying, well, this one, I took this trade, and if I'd kept it and take the Ethereum trade here, if you'd done nothing apart from a stop and a profit and a take profit level, and you'd done nothing in between, you got out at 5, 5 and a 0.47 to 1. That was your return. So if you'd started fiddling around with it, you might have only got out at 2 to 1. And so that's what you need to keep track of that in your metrics as to whether you moving targets, moving stops, your trade management is actually better than just a set and forget system. Okay, I just wanted to those trades have all now completed, and so there's no open. Again, this is just trading. This is not investing. You may. I still own Bitcoin. I still own Ethereum, and this is just trading, being able to trade both sides, long and short, to take advantage of of moves in the market. I'll leave it there. I won't. I'm planning on doing an NFT video. I won't tag it onto this one until we get some new headphones through. Okay, good luck, trade well, cheers.